Hi everyone, welcome back to Clearing Spotlights, where markets meet clarity and institutions navigate liquidity, risk, and infrastructure. And today we have two of the legend guys from the market who are helping shape the future of digital finance. Everyone, allow me to introduce you first. Ryan Miller. He's the Manager Director and Head of Sales at OSL Digital Securities, one of the Asia's first licensed digital assets platforms, with a background in institutions, trading, and market structure. And of course, we also have Kevin Lee, the Chief Business Officer at Gate.io, one of the world's largest and longest running cryptocurrency exchanges. Together, they represent two essential perspectives on how digital finance is evolving. Gentlemen, welcome to the podcast.
Well, yeah, thanks for having us.
Indeed, thank you.
Before we get into the specific, I would like to mention there's been a lot of transformation recently in the market. So there's like regulatory tightening, like maturing infrastructure and institutional returning. So the first question I will ask you both. So from where you stand, what's the biggest sign of the digital finance has entered in the new era you can see?
Yeah, that's a very good question to have. And it's a narrative back in the days where people talk about digital asset is still around, whether or not it's legitimate, whether or not it's still being used for, just like drug trafficking or like just like illegal activities. And the narratives now becomes like institutional adoptions. It's about like how we reach out to the next billions of users. I know it's a cliche, but it is what it is, and how we shape the industry going forward. So from day to day, I mean, yourself, me, and Ron, we go out and interact with a lot of community these days, and we found out that it's good to see that shift of like the way the day-to-day discussions being in different levels these days.
I think any kind of, quote unquote institution, any kind of large player, it was all a lunch and learn. It was a lot of what is digital assets, what is custody, what should we be looking at. Now it's how. How do I get into this space? How do I onboard with you? What is your pricing? What coins do you offer? What does your settlement look like? Before it was, I don't even really, quote unquote, believe in this ecosystem. So the narrative, the discussion with clients, especially on the institutional side, is significantly different and a lot easier on a sales point of view.
All right, okay. So let's set to the stage then. Before we dive into the specifics, I would like to get each of your perspective as well. So for Ryan first, maybe this time, from where you sit in a regulated environment, how would you describe the current stage of the digital assets market? Like, are we entering a more mature or institutional phase, or are we still very early development stage?
So, I mean, of course, again, mentioning that I've been in the market for some time now, I mean, obviously significantly different. When we stepped in, and even for the first couple of years, there was no regulation, there was no clarity, there was no oversight. A lot of players were looking for that, and now we sit today with regulation and clarity across pretty much most major financial centers or countries around the world. We have at least a pretty strong base. In some countries, we now have regulation that sits on the stablecoin side, on the OTC side, on the custody side of things. So it's not even just one regulation that kind of covers everything. They're starting to go into levels of different regulation. I think for a lot of institutions to step into the space, it was more, I don't really have much reputational damage. The president of America is actually getting involved in this space. So for me as an individual, or me as a firm, as a chief financial officer, as a head of treasury, me stepping into the space is a lot easier. So and that's obviously also borne by the regulatory clarity.
So for Calvin, what about you? Like, you operate on a global scope. Like, what patterns of behavior that you are seeing across the regions that are definite, like this stage of the market? How have users' expectations evolved since the early trading years, like few years before, compared with?
Obviously, again, just like going back to my first answer is like how the narratives change, especially when you're operating in like a centralized exchange. A few years back, you will see a lot of people is talking about, not your key, not your Bitcoins or not your crypto. But nowadays, like there are much less people like being stubborn about that. It's not about whether or not you hold on to a single belief anymore. People are more like retail users are more willing to go into different routes, how they're going to invest or how they're going to use cryptos. very similarly like institution as well. So I think the market has much more variety right now. That's I think everyone's like benefit from it.
That's great. We can also see even like retail users or institutional users, they're expecting more and more from the market exchanges as well. How have the recent market shift, like we can see like from ETF approvals and listing of debts that to regulatory like tightening, like change the ways institutions and retail users engaging with digital assets. What do you guys think about it on this part?
In the recent years, I think it's the market is much better with what I would call like crypto adjacent solutions and platforms that help these traditional financial institutions to help them to adopt. So going back to the examples, ETFs is a really good thing. Just like traditional technology, traditional exchange, they're very happy, their compliance very happy. Very similarly, like on the futures market, CME, etc., they feel very comfortable to get into the exposure of a new asset class without being exposed to the new counterparty risk or new technology.
I think you nailed it. I mean, I think we've seen through the years that stepping into the digital asset space is a little bit quote unquote scary. There's a lot of new. So what they try to do is take away some of the new. So, okay, I'll go into an ETF. This is not new for me. We've been trading ETFs. I'm trading it through BlackRock or Fidelity or whoever. That's not new. So we definitely see that as a stepping stone. They will always start there. And then sort of a year later, when the entire company has got used to that digital asset space, then they go, okay, let's go one step further. Actually, my risk, and they go outside the sort of quote unquote counterparty risk curve. And that's where they kind of go into DeFi and move out of it. And of course, going back, to your original question around digital asset treasury companies, same thing. I want to get involved. I'm a Hong Kong, professional investor or retail, investor. I want to get involved in the digital asset space. Well, do I really want to go and buy on a DeFi Bitcoin and hold it? Okay, I can buy a listed company. Listed companies are so tangible. They're so, again, it's a much easier way just to step into the space.
Is there anything that we should be cautioned about this kind of like setup or like this kind of trend to some users? Do you see any like something maybe that we have to keep an eye on it right now?
I think, ultimately, the biggest sort of, I wouldn't say concern, but the thing to look at is price movement. Market volatility around digital assets it is very volatile, and we've definitely seen that in the last month where, on a Saturday morning we had a significant move down. I think that's something that users have to get used to, and something that I guess the ecosystem also needs to try and improve to make sure we kind of reduce that, because it will always, set people back a little bit. But yeah, other than that, I'm 100% for crypto.
What about Kevin?
Yeah, well, I think we have to be reminded that like every single day, there's like 250,000 new users coming into crypto now these days. It's a lot of people. This is the first day they're buying a Bitcoin. These other people never actually see a day of a bear market before. So when they unfortunately get into a loss, that would be the first time they lost. It's still a relatively young industry. We've seen like maybe 7 years, like 3 cycles already, 2 cycles, 1 cycles. But we have to remind that that's still a large portion of new users coming into the space that they haven't actually seen that before, experienced that before. And it may pile up into a sort of potential problem.
We see the sign of the maturity, how the market goes right now, but also a renewed focus on responsibility and trust, which brings us perfectly to our next topic. For Ryan, OSL is a license under Securities and Futures Audience in Hong Kong, so this LTP. And Kevin from Gate, for both of you, these questions are, what are your thoughts on the convergence of regulations addressing both traditional and digital products? Maybe Kevin first.
Coming from like very similar to Ryan, come from like many years in traditional finance. What I see is like I don't have to be pro blockchain or Web3 to make things work. So I would have to look at if business applications in blockchains are actually more efficient than the traditional way to switch over or to have like a parallel applications. And by the end of the day, I hope to see we will have these 2 different industries, the traditional finance and crypto industry, emerge and converge together to become a single industry. So I don't mind either way. I'm just happy to have a new technology to make things more efficient.
Yeah, I think that's right. I mean, I think that what the crypto space is trying to do is look back at the past and learn from mistakes. Also take into consideration, and ETFs are a perfect example, take items, take products that worked very well in the traditional world and effectively copy and paste them into the crypto space. So you need that institutional space with as a bare minimum the normal product offering. Again, trying to leverage from the mistakes or the products that didn't really work in the traditional world and then encompass them into the crypto space. I just want to kind of focus on the ecosystem, and that's where the traditional finance and the crypto space need to come together and give us a platform that has the best of both worlds, without stifling innovation, of course, as many people have said.
I do agree about that as well. So, but looking more closely right now, the Hong Kong government has done a good job of balancing like customer protection versus encouraging innovation and growth in the first phase of the digital assets industry. But now the US has changed its policy to be more growth-oriented than regulations. So what consultation proposal would you make it the Hong Kong government were to ask about phase 2 in Hong Kong?
Maybe
I'll go first. Well, first of all, I'm born and raised in Hong Kong, so I definitely want Hong Kong to be successful in our space. Because I'm also working in this space, I couldn't comment on like very specific policy. If I have to say anything, as the SFC doing a great job, the HKMA doing a great job. Like we have seen, Ryan and I both seen and experienced firsthand experience that the frameworks in Hong Kong is sound and solid, and they have started a long time ago before any other jurisdictions coming into this space. What we need is whether or not we have the courage to make it like a holistic policy for the whole city. I think we'll be very successful.
We led the charge in terms of Hong Kong, in terms of regulation around Asia. As an ecosystem, have been going forward for 5 years. It went from, I guess, no regulation to institutions, retail, ETFs, and omnibus. What I'd like to see, of course, is products. You know, can we get some options? Can we, or maybe options is phase 2.5, but you know, it's sort of leverage anything on the, we are stepping into the DeFi space as well. So I kind of a push for there, but I would also just sort of add as well that, you know, the regulator has to come and play ball. So the ecosystem also has to come back and say, look, we can, you know, provide you, we can offer you a stable environment to regulate. So that's also on us.
Okay, thank you for some insight of this. So how do you guys also see the global exchange aligning or clashing as different regions define their own rules? I mean, is the transparency enough to rebuild the trust for the retail user or even institutional user that you've just mentioned? There's so many things happen for the past few years. What do you think?
Oh, wow, that's a lot of questions. So I don't think they go in with their own rules, very specifically because like trading Bitcoins and USDT pairs is so fungible. You can trade in any jurisdictions. There's almost like no difference. So, and regulators around the world have realized that. So the rules and the frameworks of regulating the digital asset and cryptocurrency has been more coherent and consistent across the board. So for Gates, as an example, so we have Gate Japan acquired a licensed platforms in Japan. We have announced that Gates Dubai have the full operational license with Vara. And also we just announced in Singapore tokens that Gates Europe have Mika. So it's actually helped the regulators being more consistent and help us to go for the license more easily as a global exchange. Back to your point is like to give our users trust and confidence.
Again, we're always trying to find that kind of perfect balance. And it's not like they, just because they're unlicensed, they're acting in a very unsecure way. It just means that they're unlicensed. So you're trying to find this balance where you have a regulated venue with the right amount of products. Because if you don't, you're always going to force clients to be pushed into these unregulated places where the risk is a lot more. The other point is also around, you know, and it has to be spoken about, is how to make money. If you are an unlicensed, if you look at the most wealthy crypto exchanges in the world, most of them, if not all, have all been unlicensed. So when people look at regulation, they go, I can go down this whole regulatory path and not make too much money, or I can stay unregulated and make a huge amount of money, but also operate legitimately. But as the banks taught us, just because you're regulated in 1,000 different countries doesn't mean you can't do something illegal. They've all been caught doing everything wrong. So yeah, again, I think it's trying to find that perfect balance between regulation, but also product offering and making a little bit of money.
That's a very great point. I mean, this is a very tough part in the market right now. But given that DeFi is still continues to grow, and a lot of people, they would love to trading on decentralized exchange. So yet centralized exchange remain at the center of the liquidity and assets. So let's explore like these two, whether they can coexist, like centralized exchange and decentralized exchange. Coming from a regulated centralized exchange, how do you see centralized platform fitting into a world increasingly focused to DeFi, as you mentioned?
We got a number of different sort of solutions, products that the DeFi doesn't, mostly around fiat on and off ramps, getting whatever, I don't even know what the market cap of stablecoins is now, but it must be, what, 200 billion? Give or take, getting the fiat on and off ramps is obviously where centralized exchanges go. And then, centralized exchanges and regulated environments or regulated venues are a stepping stone for the institution. And that's where I see us coexisting, is we will, in the coming years, be the way for you to get access, get that institutional money in without them having to step massively into the space. But I will just kind of finalize is if we had this conversation 6 months ago, it would be a totally different thing. It would be liquidity. It would be UI. It would be engagement. It would be products that the centralized exchanges did much, much better. But these decentralized exchanges are really coming up with some very powerful solutions. So I think we'll find a way to coexist.
What about Kevin? Like Gate is in both centralized and Web3 space. How do you see like two ecosystems complementing or rather than competing?
I definitely think we're complementing each other, and in fact, we are in the last quarter, we're going with the all-in Web3 vision, where we do see that as a centralized exchange. So you talk about we being quick. And in fact, like you list some token within the first hour, it's not that quick anymore, because like on chain you can trade at the same second they being listed. So we see that, and it's become like a void in our offering in a centralized space. What we do is like we have high performance matching engine. We do have that offering already. First is against capital efficiency, where they can have everything's within this one platform. It's a one-stop shop, realistically. The second thing is we will have more leeway to control the developments going forward and the projects on our own chain, on our own layer 2, on our own decentralized platform. So definitely, we're definitely going into that space, and hopefully, maybe in a year, 2 time, we don't call exchange centralized or decentralized anymore. We just call them exchanges.
Yeah, we hope so. So institutions are no longer standing for the sidelines right now. They are asking how to engage safely, efficiently, and at scale size. So let's talk about like what it takes to build a level of infrastructure. So for Ryan, OSL serves institutional clients directly. What are their key features, safeguard they demand before engaging into the digital assets?
So I think there's one thing that sort of jumped out at me right from the beginning of talking to, and dare I say, like, traditional institutions. And in my sort of quote unquote sales pitch, I would talk a lot about security, client segregated assets, client segregated money, insurance, regulation. And very quickly, I learned 2 things. One is that their first step into space is going to be a very tiny amount of money. So if it's a multi-billion dollar company, they're going to put $5 million, $1 million into it. So what they stopped me very quickly at the beginning and said, don't worry about the $1 million. I am concerned about the financial loss, but what I'm most concerned about is reputational damage. When the ecosystem was kind of growing, what you have to build something that they can step in. They can, they can step into the space, they can do it safely, they can do it securely, and they can not cannibalize their current business.
I totally agree. We have faced a lot of like traditional finance clients come to the market as well, especially institutional clients, that they are literally looking for this most safest place to trade. So this for Kevin, like because you are as a global exchange perspective, how's the institutional adaptation for you guys shaping the platform strategy? Because you used to serve retail clients more than institutional clients.
Well, I would say we serve both, but I think it's important that with the experience and knowledge we have into digital finance, we almost certain how the directions of our industry will go in the future. For instance, one of the big thing is like prime broker. That's why we're working with you guys. It's going to be very important for institutions to engage with prime broker to go into different exchange and manage the capital efficiently. So this is something that we do as we know that's what the institutions want. They want, less onboarding, less KYC. They want to focus on just engage with an exchange, but they want to tap into different liquidity as well, or arbitrage around different spreads.
Thank you. That's a very interesting point that you just mentioned. I hope that you'll be increasing your volume on your exchange as well. So we've talked about where we are just now, so let's look ahead. We are now nearing the end of what has been such an insightful episode. So for now, I would like to each of you to look forward to a horizon. Tell us what's the next, Ryan. Looking 3 to 5 years out, what's the biggest shift that you would expect to see in the digital assets market operate?
For me, I think the biggest change, or the thing that will change, the item that will grow the most, I think is going to be the stablecoin adoption. I think the digital asset space has solved some problems. It does some cool, some funky things, but I think that's a real world solution. And obviously the regulation, it's become a big narrative right now. I think regulation will step in. I think they'll drive it, and I think that stablecoin market will become significant.
What about you?
So I would say, if I look at it this way, 3 years ago, what's the bottleneck was technology. So we had the technology already, and because of the regulation environments back 3 years ago, there's a lot of things we cannot do. So now is the time that we do it, because regulatory environments has changed in our favor. And in 3 years later, that will be the user experience, and it will be very consistent. And I think this is the one big prediction is we will stop talking about a lot of terminology we talk about these days in 3 years' time. Stablecoin, maybe it will go so big. It doesn't matter if you just use Google Pay and Apple Pay. It doesn't really matter what you're paying from. Is it your fiat wallet or your stablecoin wallet? So it's just a form of payment. When we reach there, I think that would be a really true definition of we reach the mainstream adoptions in the future.
Thank you very much. It has been a great discuss with you guys. Before wrapping up, I would really like to do a prediction game with you guys.
Okay. Sure.
So the 2026 prediction game, this is a real one, okay? I'm throwing a little bit questions right now, and you guys will give me a best prediction of what the digital assets might look like in 2026. No pressure, just a little bit pressure, okay? Your gut score and the industry inside. So to Ryan, which region do you think will lead the digital assets regulations?
Hong Kong? No. I think, MiCA is driving forward. It has a lot of countries underneath that. It's a pretty strong framework.
I do think so. So for Kevin, use one word to describe what digital markets will feel like in 2026.
I think it will be unpredictable because of in the US market, and that will have a definite certainty of influence to the market. Whether or not it's good or bad, I don't know, but this will remain for the whole of 2026 year. So we'll see.
Okay, thank you, gentlemen. Thank you, both of you, for giving such an interesting discussion, for rebuilding the trust in the market structure, and clear we are entering a new era of the exchange, one that is built on transparency, technology, and institutional discipline. So to all our viewers and listeners, thank you once again for joining with us. It's always great to share a light on new ideas. Wherever the market moves, we will be here to keep things clear. Until next time on Clearing Spotlight. See you.